that. Right, cool. Let's just start off by taking a look. Right, simple things. Suppose let's try and keep this nice and simple and easy for everybody to follow along with. Right, a few things then. It'd probably be wise if I were to. Well, one of the things that would be wise, I suppose, actually, now that I'm here talking about it, would be if I were to make my pictures here on the screen, the what do you call it, the ticker up the top, actually show us what we're looking at. So there we go. Make it, don't need to be quite so big. There we go. Okay, so we're laughing, we're all good. Right, so try and keep this nice and simple. Let's do the charting from scratch on this one. Nice opportunity for us to do so. Let's do it. How would you do this? You've just opened up a chart for the very first time. Maybe you're new to trading, maybe you're an expert trader already, but how would you do it? You can always let me know in the comments down below. First thing I generally like to do when I open up a chart for the very first time is to, and this isn't the first time obviously on this one, but you know the point I'm making, is to just draw in a couple of areas in terms of support and resistance for us, just so we've got a couple of ideas. It's always a nice sort of start for us to do that. That's a little bit low. That thing there in the way is not convenient for me. So a couple of bits of support and resistance. There's three clear areas, obviously. The lower end, the mid range, if you like, and then the top end of things. Stick that there. Now, just like Peter Grant says, here's a little tip again for people. Support, resistance is ENC, resistance, yeah, vive la resistance. I should have remembered that from the French, of course. Support, resistance, necklines, confirmation lines, etc, best thought of as zones as opposed to lines. Okay, so we're not talking about exact dollar value, exact absolute precise to the penny number. What we're really talking about is of course the think about these things in terms of being like zones. Fling that away off to the side of the screen though. That was just a tip for everybody. Wrote it down so that it would kind of, some people are visual, they learn by reading. Some people are aural, right? Yeah, audio learners, whatever. I don't really know what the words are. So yeah, the next thing I like to do, generally speaking, if it's going to be, if I'm looking at a clean chart that's not got any indicators or anything on there already, would be to fling on a Fibonacci retracement or two. So I'll probably do that now. I'm just trying to establish, this is the 4-hour time frame. This one only goes back as far as December 2020. Actually, that's when this thing launched. In fact, yeah, this is such a short-lived thing that might as well just draw in from down below. Handy if you want to use the magnet tool, which I'm about to do. Then that makes it easier to find your precise areas. Okay, I'm going to take the magnet tool off again, and then I'm going to bring up this thing here, and I'm going to go extend lines to the right. Okay, there we go. So went from this low to that high. You always go left to right when you're doing Fibonacci. Low to high. We're in here at the 382 Fibonacci line. Now the retracement point, you could call it. Now the 382 or the 38.2% or whatever you want to call it. I like saying 382 because I like talking about it that way in terms of like decimals. I mean, there is no right or wrong. Right, there's no right or wrong in anything that we do here. So anyway, we're back up above the 382. We came down. We did a 50% retrace. So Dow was very, very, very happy to see this here. So so Dow Theory. Wow, look at that. Dow Theory. Wow. Had us coming down here. Then what did we have here afterwards is potential for a. Let me just see if I can get this to look good. It's not going to be easy because if you've seen my art skills, well, okay, that'll do. Then what we have here is a potential doubly botley, I'll write it properly, double bottom. There's no L in bottom. So is that a possible double bottom that we're seeing there at that point? and then we've moved towards the top side. Okay, now also I would probably at this stage as well, having identified a potential sort of chart pattern, look and see if it's fair to think about anything else. Could it be that we're looking at a sort of head and shoulders on the downside here? Now we don't have a head, right? We don't have a head. Here's a quick then thing here. Is that a head and shoulders? So this is maybe the most popular phrase bandied about. Actually, it's not "is that," because we're talking about there's a head and shoulders on X time frame. That's the most popular phrase bandied about amongst sort of novice traders who are trying to impress other people. Really. Instead, what they should be asking is that a head and shoulders, as opposed to there is a head and shoulders, because we can see here that the head is the same as the left shoulder. Alright, so in a situation where it's like that, what are you probably looking at? Probably looking at an Adam and put in the thingy there, Eve instead, right? So that's how you would talk about that. It's the same as all twin peak patterns. All twin peak patterns have got, or twin trough in this instance, have got a similar sort of basis anyway. Fling that off the charts. We don't really need it. But what I will say is I'll add to this one and I'll say Adam and Eve. Okay, Adam and Eve, Adam and Eve there, potential for us. So as an Adam and Eve double bottom, therefore, if you wanted to say the full thing. And it's quite nice to have seen an Adam and Eve double bottom come in here at what the Dow theory would suggest would be a significant point in here at the 50% retracement line, in of course a clear area now of support and resistance. Okay, so that's a clear area, so we can start then to form up clear price points. And on this one, we're going to talk about the price point of 145 as being crucial, as being the trend inflection point. Potentially at the moment. Okay, so one of the things partly as well in this discussion that I had earlier on, pre-show discussion in the Neverland chat room in the Discord, in the Discord, was to do with would it be really bad to see the prices go down past the 50% Fibonacci retracement point? And part of the discussion was, well, it really depends on so many things, because you're looking towards the 50 or perhaps the golden pocket area before you would start to say things are quite bad, and at this stage here, seeing a double bottom here at the 50% kind of underscores, as we already did at the very outset of the show, of the GRT section of the show here, with that horizontal support and resistance line. So there you go. So that's obviously the trend, and that's what I'm going to call the trend inflection point. I'm going to make this here red, in fact, so that it's actually, no, I'm going to put it back to being green because it's so readable. Forget about that. But anyway, that's that one. The interim sort of support period, 178. We don't want to see that break. If we see 178 break, then you're looking at a big chunk down the way. I would expect us to retest this area. Okie dokie. But what about this Adam and Eve? What about this Adam and Eve? Is there something to be said about it? Well, look at that. This here is, of course, then therefore the neck, if you want to call it neck, or confirmation line of the A and E, the accident and emergency. Adam and Eve there. So that's what you've got there on this one. Okie dokie. And then from this point here, what I think is probably a good idea for most traders to do is to stick on a few moving averages. Now actually I need to change these back to the settings that I've been using of late before we go any further. Now the numbers that you use in your Fibonacci and your moving averages, now a lot of people are going to say a lot of things about them, but most people saying most of the things that they're saying are talking out their wazoos about it. Okay, really, ultimately, your consistency as a trader, your own individual track record, etc., is what's really going to kind of determine what numbers you decide to use. There isn't actually a best fit answer. However, if I had to give one, my best fit answer, if I had to choose one Fibonacci and you put a gun to my head, would of course be the, not Fibonacci, exponential moving average or simple or any of that, well, exponential, would be the 21. Peter Brandt, as we spoke about last week, uses the 18 period, the 18, and I'm using which happens to be what I'm using here as part of this setup, but I actually prefer the 21, okay, as it happens. Anyway, this is what we're going with, and I'd pop all these things on, okay, I'd pop them on, but I'm going to start off by just kind of, you know, looking and seeing how have we performed in this 50% drop down, having come here, just to underline again the discussion that I had earlier on about the significance of dropping down past the 50% point. Well, as we can see here, if we did go down towards this area here and have a triple bottom instead, then what you're looking at is, of course, the likelihood being that you would see a cross happening here on the daily time frame between the golden, a death cross between the 200, no, not the daily time frame, the 4-hour time frame. So it's not the death cross, sorry, caveat explainer, it's not the death cross, but of course, you know, if we saw a death cross, a cross between the 200, which is this white line simple moving average, and this red line, which is the 50 period simple moving average here, right? Then of course that, I mean, sorry, if we saw the prices dropping down here, we would see that death cross happening. Okay, that would be very negative, and it would preclude a lot of people from taking positive trades until such times as everybody else made the markets go past those points, or indeed until such times as the natural oscillations in the markets themselves led to these averages then coming back to being closer together and crossing back the way again. Now, what do we say after this happens is that we see, if we see these things cross, what do we say? Outcropticians out there all know it, they all know it already. New family members might be less familiar with this, but of course outcropticians know this. If we were to see these cross again, the general expectation would be actually to see a retest of them, much in the same way as we saw a retest of them over here. Now this is obviously kind of, you know, not accurate to say, because there isn't enough price history for this 200 simple period average, moving average, to have actually, you know, to have crossed like this, but you can kind of tell, like, you can kind of tell if you were to extend it to the left that they would have just crossed, and then we had a retest of the 50 and the 200 simple thereafter, which means that if we did see the prices dropping down to this 50% area again, or indeed if we saw the prices dropping down towards this 618 area again, that I would probably anticipate some sort of bounce at that stage up towards testing this one or both of these moving averages, so either the 50 or the 200 at that stage. Now that's all the negative scenario, but it's good to know it in advance. What the positive scenario, of course, is that this simply doesn't actually occur. Just, you know, throwing in a little bit of clarity on this one, if we did drop down, then you find that the 50 simple period moving average is actually lining up with that 50% area, and that would then give you a nice bounce area potential for us on that again at that triple bottom area, right? If that were to become a triple bottom at that stage. Now of course as well, the triple bottom, you know, support and resistance, they get stronger and stronger the more they get tested. Oh, blah blah blah. No, that's all bullshit. You don't want to see a triple bottom. You'd much rather see just a V-shaped recovery. Okay, we didn't get a V-shaped recovery. You'd much rather see a double bottom, maybe with an Adam and Eve. Okay, we didn't get that. You'd much rather see a triple, and you know, you can see how this story goes. You don't want to say, we tested it 55 million times, so we're really happy about it. No. Although actually, if you tested something 55 million times and you never broke it, at that point, I think it'd be fair to say it has become very strong. Okay, there is no precise point there where you'd say that it's helped it or it's damaged it. There isn't really one or the other. For just conversational basis, you're better off probably erring on the side of weakening as opposed to strengthening in both directions, which is why consolidation at an area of support or resistance is, of course, exceptionally good to see if you're looking to get into a trade past the breaking of it, as opposed to just simply going up there and hoping that we'll just push on past at that exact moment in time. So continuing on with this story, dropping back down to the 4-hour time frame here and saying buy jingles, by the way. I think this is really good. Let me know what your feedback is, Lord Verhoeven, and everybody else, if you want to, in the comments section. I don't know, I'm thinking feck me, this is some awesome technical analysis. I don't know what you're thinking out there, but I just remember from my point of view when I was watching technical analysis, you know, type of stuff, freaking years and years ago, thinking, why don't they do it like this? Wouldn't that be better? Anyway, here we are. Be the change you want to see in the world. So I'm just going to remove those two from here. We kind of discussed them to death at this point, and instead I'm going to stick on these four down below and just kind of zoom on in. Now it's obvious to me that this is the way it would be in advance, but here we have it, and it might not be obvious to everybody, but we can see here that there is of course a coalescence, if you will, of the moving averages over here, and we can see that they're just starting to cross towards the top side. Now that's obviously quite good. It's good to see. It's lovely to see that they're just starting to cross towards the top side, and we're getting positive crosses. Now of course, by which I mean, and this is also ties in nicely with what we were speaking about earlier on, by which I mean, you know, you can take off a couple so you're not so blinded by it, but of course everything's kind of crossing over nicely as well here, and it's just waiting at the minute. Will we see the 36 crossing over the 54? I wonder, because that's the last of the four of them to cross before we get to go up the way. Now that does this kind of pertain to, if you like? Well, it pertains to the shorter term the shorter term structural area of this chunk right here. Excuse me, like I say, not 100% at the minute. So what would the significance be of coming back down towards this area, and what would the significance be of going back up above our previous highs? Well, I think there's a pretty easy way of identifying what the significance of this would be by leaning on or exploiting, if you want. Let's do that. You know, let's talk about it like exploiting. Let's exploit the pattern type psychology when you're looking at the charts and say, well, look, you know, 1, 2, 3 times we've come down towards this area, we've been up at that high, we've come up here, and we're now asking, you know, if we were to sink back down the way, it would start to look like perhaps we've got a bit of a descending triangle on the go of some shape or another. Now this on the 4-hour time frame doesn't look super magical, but on the 1-hour time frame we get several more touches on it. So let me just kind of rejig this slightly for us and say, hey, look, you know, could we be in the throes of breaking one of these right now? Now, of course, if we were to break past this and move on up towards the top side, it gives us a measured move. We'll take a look at that in a minute. If we come back down and retest it, then that's all to the good. If we actually break the structure that we have over here and move on down the way, that's not obviously so good, and you'd be looking down here and saying, well, we would need to find some support where we did previously, or of course, we're perhaps going for a measured move. What are the measured moves going to be off of this? You will not be surprised, ladies and gentlemen, when you see that this lines up perfectly, obviously, right? It's obvious. I'm not doing anything particularly special here, and I hope that my sort of the last scenes of the final third, the final act of The Wizard of Oz, you know, the man behind the curtain thing that I'm doing here will hopefully dispel some of the magic of technical analysis for you, make it a whole thing more accessible for you. If you find that this type of technical analysis makes it more accessible for you, and as a result you learn more, then by all means drop a like on the video. And then you'll also not be surprised to see that movements from this, if it gets overextended, will take us up towards our previous area. But look at that. Of course, if we did get a movement up the way as a result of pushing outside of this zone, then we're taking out our previous high. Zooming over to the left though, it doesn't take us into you know, the real highs. It just takes us past this little bit, and we'd be looking at an upward trend perhaps. I am tempted to talk about this in terms of this lower term time frame, by the way, as being like a head and shoulders, because we can see that the bodies actually closed of these candles there, and the bodies closed there, and giving us a bit of a head and shoulders as well on this thing. So if we had a head and shoulders on it, what would that then lead up to? But just we'll take a look at that in a split second. But what this takes us up to is the 236. Now this would be your natural failure point on any sort of recovery from this downward trend aspect of things, since, you know, the highs in the 11th of February down to where we find ourselves now. Of course, it's been the guts of a month, and a short month, but there you go. And we're looking up 3 weeks, let's call it, but let's call it guts of a month. Then the 236 at 220 would of course be a key area for us. So what we really need to see is, if we want to sort of have a sort of the downward, the smaller time frame downward trend break point comes in at 2 places. One, Fib theory over I'll type this in simpler. The Fib theory would be in at 220. So that would be very good. And of course, just market structure, looking for highs. You know, we'd have to then be looking up towards our previous high, and let's just say that we'll you know, consecutive opens and closes on a decent enough time frame up above that price point there, which is what, 270 is going to be the next one. Okay. Right, so how does all of this line up the way? Well, I'm probably going to find that there's yet another no surprise element for us. Let's kind of draw a rough neckline in here so we know where to measure from. This is a 1 hour time frame, looking at this thing and saying that there's a potential for head and shoulders. Well, if we were to go up here and push past it, that takes us up to, well, that would give us a sort of triply top type aspect of things, but it's not like, you know, setting the heather alight necessarily. I could sort of cheat and scratch up a little bit, but, you know, still not setting the heather alight necessarily in terms of changing that trend. Okay, so even if we did have a big one here, then we're not necessarily going to then fly on up the way parabolically afterwards. All of these points, if we were to get to them, and you know, there's a good chance of profit taking having happened in there. But the head and shoulders move takes us up towards 260. I suppose let's call it 250 and be a little bit less sort of overeager on it. And as well, let's just quickly, you know, point out that in terms of the textbook of these things, actually you're looking for the sort of 60% area, and that means that it's actually taking up towards 230. So the textbook measures move off of the head and shoulders would take you up towards this area of liquidity. You can get double confirmation on that sort of thing by just sticking on the VPVR so we can see it for ourselves. Here, and well, actually no, despite the fact that there was a fair amount of price action happening in here, there was no huge nodes along the way there overall, but you can see that you can see how this lines up with our Fibonacci very nicely. Key points for us, for takeaway points, obviously here things get very exciting for the good side. Here you can see this is the largest area of the VPVR, and on average, you know, the next, you know, the actual largest area as a result of having come down here towards the 382 and spent this time consolidating in here is at the 382 there in terms of the larger, but breadth-wise, it doesn't have the full range that one does. But look at this here, how it drops off down to the 618 before it kicks in again. Lovely. I didn't know it would be like that. I'm just trying to demonstrate to you the way that technical analysis always comes back around and links together again. There isn't really one single school of technical analysis which you should just say is the best, because that ignores the interdependency of everything when you're extrapolating it out from just 3 pieces of information. What's the price, how much volume was there, and what is the time? That's the 3 pieces of information that every single other piece of technical analysis is derived from, which is why there's always an overlap, and it's why you shouldn't just put all your chickens in one basket or whatever. I guess you put the eggs in, but what came first? Hey, ladies and gentlemen, what came first? So what's next then on this around the technical analysis world that we're looking at? There's other ways, but at this point here, since I've kind of more or less covered everything in terms of price action, everything's just going to overlap again for us. Let us just do some of that overlap though real quick. I'll stick on the Donchian channels here. In terms of this 1 hour time frame, you can see that it's clearly pointing towards, you know, our little zone of the our little zone of this down towards the 382, and of course where our recent high was in terms of Donchian channels. But in terms of a larger time frame, we'll probably see some overlap here. Oh, glorious! Look at this, glorious fake out territory from this ascending triangle would come up towards where our second high was. Our inflection on the way down the way as part of this structure. So then you're looking towards $2. It's a nice round number. It's where the top end of the Donchian channels are. Clearly a significant area for us. Let me just see where's my thing here. So give me this $2, essentially $2 if you want to say, you know, well, what's the next target, Rocky? What's the next target, Rocky? Question mark. Well, conversationally, well, that would have to be in at the top end of the fake out territory in there at that round number of $2, which also happens to be the top end of the Donchian channels. Right, perfect. Lovely typing. And then what we then of course also can see is numerous other overlaps. Let's do it, let's overlap with love over here by sticking the Ichimoku cloud on. Now we can see that this is obviously causing a great deal of mess on the chart, so let's just try and use our memories for a second here to try and see if or we can flick between them, I suppose. Oh, look at that. Look at that. So the lower end of our ascending triangle or descending triangle lines up perfectly with the lower end of the Ichimoku cloud, and of course that would be, you know, significant to go past that area, probably, right? I don't know. What are we doing? I don't know. Might be worth being aware of. So let's just reiterate again the significance of 175. Did we already type that in there already? No, we don't have that, so that obviously needs to be on there. So if we are looking down the way at the minute, you know, the nearest real danger zone past the 382 is going to obviously be the lower end of that ascending triangle, and the cloud, the itchy and scratchy cloud. Okay, so cool. So that's the obvious significant area, which equals $1.70. Wait, 170, 174. I think I was probably going to go for with that one. And then what else do we want to do? I mean, we've absolutely done more analysis than you could have poked a stick at so far. But what else do we want to do in terms of this thing? Let's see for a second. We are above the cloud right now. Let me hide my moving averages, make it a little bit cleaner for us. We are above the cloud right now, but what we've had just there now is a negative cross. I would not be going long on this right now based off of the itchy and scratchy cloud right now. Instead, I'm waiting to see if these things cross over. That ties together perfectly with everything that we've been saying. What else is missing from this TA at this point here? What else is missing? What's missing? What have I not done? Hey, anybody out there in the chat, let me know in the chat there what I could possibly... Oh, the oscillators, thanks. I mean, because I knew myself. Right, gosh, let's do this. Right, so we've already done 100%. Let's take it, push it to the limit. What sort of enthusiasm would we have? Let's double down on the compounding of our enthusiasm. If we were to go up towards the top side, hidden bullish divergence. Oh, how lovely is that? Breaking out past the top end of this ascending triangle type idea. Now, of course, it isn't a perfect descending triangle. Let's not beat about the bush with that one. It isn't. Over there on the 1 hour time frame, it looks a lot more like it could be, but certainly not with the itchy and scratchy cloud on at the same time. But yeah, you know, there we have it. By the way, 1 hour time frame, this is crossed, positive cross, but it's crossing within the cloud itself. If you're going to be a itchy and scratchy cloud enthusiast, then you're probably looking at this and saying you wouldn't take a trade on this while it crosses within the cloud itself. Now, bearing in mind that this is obviously unlikely to cross after it moves outside of the cloud, but you know, you're looking for these two lines to move outside of the cloud itself. What does that really mean in simple terms? What you're looking for is the average price to be above the 50% retracement price over the period from the last major period of consolidation or price action within the last 24 candles or so. 26 candles, right? That's what I'm trying to say there, to put it in simple terms. That hidden bullish divergence, is that real? Is that a thing there or not? I don't think that that's fair, given... No, it is a thing. It's a thing. We've got a tiny bit of hidden bullish divergence there. Things look like they're setting up for an upward move. Okay, they do. This is the story that we're painting here. A lot of people watch my show, and at the end of it, they're like, I don't know, he told me everything that I could possibly need to know, but I still don't know from all of that what I need to know. I'm building up a narrative here, as you can see, looking at these smaller time frames, combining them with the bigger time frames, and looking at the overall picture. There is a good case to be made for a movement towards the top side, and of course very easy to manage risk zones, and that's what I've pointed out here. So let's just be clear about that. I'll check in with the chat in a second to see if there's anything that anybody thinks that I've missed from the technical analysis so far. By the way, this is going to be the most detailed technical analysis that I do today, right? I'm not going to do the rest of them as detailed as this. I just wanted to give Lord Verhoeven the a bonus, right? Because, and everybody else watching along, a shit ton of education. And why? Well, check it out. The guy was generous. He put in the donation before it even actually come on camera, and there you have it, right? So let's just hope he's still kicking about and actually watching this thing, hey? I'm sure he is. I'm sure you are. Excuse me for talking about you in the third person when you're probably still in the room, right? But there is also a real danger right now. Again, like, it's not crossed over. It's not worth going long right here, right now. Why is it not worth going long right here, right now? There's too much working against us in terms of if we had to build up a picture about it. We don't have to, but here I am doing it. And one of those major things is, you know, the fact that we've got this bearish divergence. What do I often say when we see bearish divergence on a chart? Well, I often say that that there is the potential when you see bearish divergence on a chart to have some sort of wedge of one form or another. Is that possible in this area? Could it just actually be forming a wedge just here? Is this the real wedge, or is it a descending triangle caught in the charts? Yeah, no escape from the price action. Open your eyes, look up to the price and see. I'm just a shit coin. I need no sympathy, 'cause I'm easy pump, easy dump. Anyway the price goes doesn't really matter to me. Bum 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 ba-dum bum bum ba-dum bum bum. The graph doo-doo-doo-doo could easily come back down to test off of the downward sloping line of this triangle. Why is that? We're in a wedge, and this is where support would be. Bum 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 ba-dum bum. Bearish divergence on the back. D RSI. Bam, ba-da-dum. Why'd you have this divergence? I know you're above the moving average, but could we not be in the bullish control zone? I want to see overbought prices, but we've not got them. We're kind of flagging. Just a minute. Bum, 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 bum. DMI. I know you've positively crossed, but the ADX remains below 25. We don't have a strength of trend. We're just in the final throes of consolidation. Bum 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 bum. Stochastics. Doo-doo-doo-doo. Why are you turning around? Could it be you're about to piss me off with a negative cross? Maybe. I don't know. These are just the risk assessments. Dum 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 I love technical analysis. Thanks so much to everybody for joining me. If you're getting anything at all of value from this show, the share button isn't a million miles away from that like button. You are more than welcome to hit both of them. Let's go back over to Bitcoin. I'm going to check in with the saying is that there's educational material here, and it's all really good to no. This is not snappy enough. Let me do that again. None of that was financial advice, by the way, people. I'm not a financial advisor. Always do your own research. None of that was tax, insurance, trading, money, financial, none of it. No advice, not advice. there is educational content here, okay? And I really try to help you. I empower you, the individual. Now, I will not show you my trades because I think it's unethical. Also, I think it probably breaks several rules on the old YouTube and American law as well, probably. As well, moreover, I don't think that sort of thing is useful. Instead, what I try to do is really help you make your own mind up about things, and to help you do that research, and to help you do that, to be your own financial advisor. I'm just a spirit guide, and I really thank you for tuning in for that episode.